Beginning of the year is often a good time to take stock and restart your finance on a better footing. Most people use January to set their financial goals like paying off debt, investing, and some saving. Now, to speak on issues around financial planning, I have in the studio two gentle ladies of substance. I'm actually blessed to be one amongst women this morning. We have a strategy and policy expert, Adeyinka John. She is to my far left. You're welcome to Business Express.
Thank you very much for having me.
And I have a personal finance expert, Dr. Sarah Amana, to my right. You're welcome to Business Express.
Thank you for having me this morning.
Okay, great. So Adeyinka, Mrs. Adeyinka, we've had this conversation before now, I think towards the end of last year, how we should plan for the new year. Now we are in the new year. And from that report we just watched, we have different views. Some are talking about January fever, January being the longest month. And from the comments we've had, it's about planning. Adeyinka, now let's get to hear from you, from a specialist point of view. How should we be planning, and not just as individuals, but as communities, as organizations, even as a country, particularly at this time?
Okay, thank you very much. So you're very right to say that what experts have said is the fever comes from sometimes a failure to plan. And the new year gives us a chance and a privilege to start all over again and to start the planning process. And I'll say that financial planning is that process where you draw up strategies, you draw up a roadmap for how you're going to generate revenue, how you're going to allocate your resources, how you're going to manage your spending, your savings, your investments, your debt, so that you can achieve your goals. So as we start the new year, we should be planning for what the year is going to look like. By starting with setting ourselves goals, I personally believe from a strategy perspective that the process always should start from envisioning. So what do you see? What do you want to see at the end of the year in terms of your finances and in terms of your life goals? And that would make you to know how much you really need financially to be able to drive those goals. And from there, you then need to take a step back to say, based on what I currently have in place, based on my current maybe salary or business revenue, can I achieve this goal? And if there is a gap between what you project and what you need, and definitely there's usually a gap, then you need to put on your thinking hats to say, what else can I do? What else can I do to generate more funding? What additional investments do I need to go into? What additional business do I need to go into to be able to earn the resources that I need to power the dreams and the goals that I have for this year?
Ms. Adeyinka, coming to you, I'm going to come back to you to give us some of those strategies explicitly, what kind of investments, streams of income and all of that. But for now, Dr. Amana, as a personal finance expert, what should we be looking at? Dirty December has come and gone. Now we are in January. It's about reality. It is the beginning of the year. And it's a 12th calendar year, months in the year. What should we be planning as individuals, particularly at this time?
Okay, so like Mrs. Adeyinka said, planning is all about taking stock, creating a roadmap to where you want to. It's the gap between where you are and where you intend to be. So when it comes to your personal finance, you're supposed to, it's personal. It's all about you. It's all about your economy. It's all about your life. So it's left for you to sit down and strategize, like she said. So it's all about strategy. It's all about planning. It's all about creating a roadmap for your own life, knowing what you need per time, taking stock of your income, like she said, basically everything she has said, taking stock of your income, your expenditure, your debt if you have some. Like you said, Dirty December has passed. There's the beginning of the new year. You need to know, because most times people don't even know how much in debt they are in because they are afraid. They are afraid of how much debt they have carried on, so they don't even bother to check. But it's important at this point to actually sit down, calculate, know what debt you're in, the amount you're in, figure out strategies on how to come out of those debts or that debt, know how to pay your children's school fees. It's the time of the year where parents have to pay school fees for their children. So you have to know, how much is my children, how much is the school fees, how do I pay, what is the payment plan? And these are plans you're supposed to have carried out before now, because these are not unexpected expenses. They're expected expenses, because like I always say, December is not an unexpected expense, because at every time of the year, December comes and you know you want to dirty December. You should have planned for it. You should have budgeted for it. You know, when we talk about budgeting, people become so scared because it feels so daunting. But it's not actually that daunting. It's just for you to sit down and calculate what you need to get to where you need to get to.
Okay, Dr. Mana, still on you, from a personal perspective, from an individual perspective. Yes, we understand that before this time from last year, the federal government, particularly for civil servants, approved a minimum wage for not just the public service, but for the country as a whole. Yet you hear a whole lot of people out there say, this is not enough to take me home. When it gets to planning based on your means, and when it gets to you having to borrow, is borrowing entirely a bad thing? Or what should we borrow for? From a personal expert's point of view, what's your advice on that?
Okay, so the borrowing in itself is not bad. But where it becomes bad is where you're borrowing for between the rich and the poor. You find out that the poor would always borrow for consumption, while the rich will always borrow to invest in something that brings back, you're making more. So when it comes to borrowing in itself, like I said, is not bad. But you need to know why you're borrowing, what you're borrowing for. Are you borrowing to eat for your stomach, or are you borrowing so that you can create wealth and generate wealth? So for civil servants that we have a minimum wage, the president has approved it and all that, but it's still not enough. What I always say, instead of jumping on the boat of borrowing, why not create an extra source of income for yourself? Like we always say in personal finance, there's a limit to how much you can, there's no limit to how much you can earn as an individual. There's no limit, there's no cap to how much you can earn. There's a limit to how much you can earn from the federal government, but you as an individual, there's no limit to how much you can earn. So what do you do in that case? You're either upskilling, or you're looking for extra source of income, or you're asking for a salary raise or something, but there's always a way. Instead of borrowing, especially when your needs are actually more than the money you have, because basically you're supposed to be able to, so that's where also budgeting comes in, because you're supposed to, from the earnings you have right now, it is almost impossible for you to budget with what you earn, especially as a civil servant. But budgeting helps you. It helps you keep a cap on your money. It helps you know what you're doing. It helps you know how much you're earning and where and what you're supposed to put your money in. So usually we say there's the 50-30-20 rule of budgeting, which helps you because, and then when you follow that rule, it helps you live below your means. So we're always saying live below your means. So when you have that 3 buckets, the 50-30-20 rule, so you know that 50% of your income goes into that bucket of need. 30% goes into your wants and 20% into your savings and your investment. Once you're able to know that, you know that, okay, these monies that I'm getting, this is what I want to do with it, right? These are the buckets I'm supposed to put them in. But when it is not enough, you have to go a step further. Look for how to earn more. You could be a civil servant. You can decide from your savings. So it's important to also have savings and investment. People complain, they're like, what happens when I'm not earning enough and all that. But from no matter how little you're earning, you can always save. Saving is very, very important. So like you said, borrowing in itself is not bad, but you should know why you're borrowing. If you're borrowing to start a business, it's a completely different ball game altogether.
Great. Let's hold your thought. Now, Mrs. Adeyinka, you've heard from Dr. Amana giving us the three buckets, 50, 30, 20. First of all, I want to know your opinion about borrowing and what we should borrow for, whether you're in agreement, Dr. Amana, or not. And give us deep insight. What should also one put his money into, talking about investment, particularly at times such as this?
Okay. I am aligned to say that outrightly borrowing is not exactly wrong. But what do you borrow for? Borrow, if you have to borrow to put that money in income generating assets. And I would speak to some of the things that you can put your money in. But if you're borrowing to fund a lifestyle, then that is actually a no-no. But somebody might be asking, well, I'm already in debt, I've already borrowed for 30 December, or borrowed for this. How do I get out of it? Part of your financial planning for this year should be how to liquidate or to pay off that borrowing as quickly as you can. And if you're creating a budget, you need to create a line for an early liquidation. So an extra 5K, an extra 10K to pay back quickly, because the interest that keeps accumulating on that is like lost money that you can never recover. All right, so in terms of borrowing, yes, but borrow. And this year, decide not to borrow for spending or to fund a lifestyle. One of the issues that people have is what we call lifestyle inflation. So maybe you earn a windfall income or you get a pay rise. Maybe they've implemented the minimum wage in your office, and then you're earning a little more, and because of that you step up your spending, you step up your appetites, your taste increases. But that is not that you don't have a right to increase your spending just because you have a pay rise. You only earn that right when you have put in that excess. So what I do, assume that this income did not come and put it into some investment. And when you start to earn returns on that investment, then you can fund some increment in your lifestyle. So talking about what people can put their money in, investment opportunities, I would say that the economy grew last year despite how turbulent the year was.
Sure.
So, and this year we're expecting better growth. We're expecting that many of the policies that have been put in place would start to kick in.
More so with a 47.9 trillion
budget.
That is huge. That is the biggest. Not to slow your thoughts at this time. Give us just in a minute investment opportunities.
Exactly.
And more like some sort of advice.
Exactly. So I was going right there. So first, if you're not yet an habitual investor, one of the things you can put your money in safe, is portfolio investment. So FGN bonds, very safe, and interest rates, because of the rates that are high now, you can earn more returns. FGN bonds, money market instruments, money market funds. So this is you just saying, okay, I want to be safe. You can be sure that you're going to earn returns that are at least above a single digits from those things. And there's a lot of money market instruments right there. If you can do more, I would say real estate is something to also invest in. And somebody might say, oh, I need a lot of money for that. But there are different opportunities in real estate as well. So shortlet apartments is really gaining a lot of popularity now. And those are things that you can invest in and expect to get very good returns.
Thank you, Adeyinka. John, I can see Dr. Amana was nodding her head while you were mentioning all of those investment opportunities. Any more on the list? Can you add some more on the list for us at this time?
Okay, so you can also, like she said, real estate, but you can do real estate investment trust. So with real estate investment trust is a pool of funds that go into commercial properties and the likes of them. You can go into that. If you're looking at long-term, build wealth, especially keen about people who have families and are trying to raise a family. You're looking at long-term, you can go into stocks with as little as in Nigeria with as little as 50 naira, 20 naira, 100 naira. Some stocks go for as low as that. You can go into that. Like she also mentioned, bonds, but it's also important at this point to mention that you should be able to know your risk appetite, because it's important. That's what will inform your decision on the kind of investment you're going into at this point in time. Know your risk appetite, know your age matters when it comes to investing, know your time horizon. What's the timeline you're looking at for this investment? If you're looking at short-term investments, you can go into bonds and the rest of them. Thank you.
Thank you so very much. You've heard it all from the experts. Invest, invest, invest. But while investing, you have to consider your risk appetite as well as your investment appetite. Create a balance, but make sure that you save to invest. Don't fund a lifestyle. Adeyinka John, thank you very much for sharing your thoughts with us at this particular point in time. And Dr. Amana, thank you so much. We're going to be having this conversation as the days go by.